Good morning, traders. This is an update on my swing trade with Spxl. So I haven't been trading it for a little while now because we dipped below the 50 MA. I did take one trade right after the dip, and I'll explain that in just a moment and why I won't be doing that in the future. And I'll talk about the trade that I'm in right now. You can see my position and my stop loss and why I entered where I did. But let's take a look first at SPY, which is also an S&P 500 ETF. This one is leveraged 3 times. The SPY is not leveraged. But the reason I'm showing you that is because I don't have a bunch of lines and notes and that kind of stuff on the chart. We could see the price action more clearly. So let's take a look at the SPY. You can see it looks exactly the same. The price action looks the same, just a cleaner chart. So we've been swing trading Spxl with my Webull account since May, which I believe is back here. No, sorry, right here. I was trading back here on SPLG with my Chase account. If you were watching some of my earlier swing trading videos, probably since, yeah, it was somewhere in January that I started trading SPLG, which again, the chart looks just like this. So we were trading kind of along this 50 MA line. This does not work for every single ETF, definitely not for every single stock. You have to kind of analyze the chart pattern over time and see what may or may not work for whatever ETF or stock that you're looking to trade. But for the S&P 500, it typically follows the 50 MA, so that's kind of the strategy based on this. There's a little more to it than that, but we've been in the SPXL swing trade since May, and every time this thing comes down below the 50 MA, I get in on the first daily candle that makes a new high, and then I get out when the price action comes back down and touches the 50 MA, and that is an attempt to avoid getting stuck in a crash on the way down. So it's worked out pretty well so far. Every single trade I've been in has been profitable except for one, which the one that I wasn't profitable in did not really follow that pattern, and I'll explain that as well. So right now we are in it, and we were in during this entire uptrend, again, out when it comes and hits the 50 MA, and then I get back in for the break of a daily candle, and then out when it touches, and then get back in for the next break of a daily candle, and then out when it touches the 50 MA again. And on this pullback, we actually added, so I can show you all that on the spreadsheet at the very end. And then what happened with the S&P 500 is that it came down and broke down through this 50 MA and gapped way down. And then I did take a trade, and this admittedly was a bit of a gamble trade. And, you know, this is kind of the first time it's done this since I've been swing trading it. So, you know, I'm still kind of trying new things. And again, managing my risk by taking a small position size, never risking more than half of my previous win, definitely never more than my previous win, but somewhere around half of it. And I'll show you again that on the spreadsheet. So on this trade, I got in for the break of a daily candle. My stop loss was the low of this candle here. And then the hope was that it would break out through the 50 MA and I'd be able to move my stop loss up to the 50 MA and then ride the next trend. But what happened was it just chopped around here at the 50 MA, and I was committed to just leaving my stop loss in place until it closed above the 50 MA. It never did. It came all the way back down and stopped me out. So we took a small loss there and learned something. And the kind of key takeaway there was I decided, you know, to make the plan as simple as possible and easy to trade as possible. And what I'm doing from now on is I'm not going to be entering unless the price is trading above the 50 MA. So that's what we did. Right now we entered at the break of this daily candle here. Let me zoom in a little bit here so there's no confusion. So you can see that it was kind of trending down here and then popped up, and then it broke out and it closed a candle above the 50 MA. So that was my first signal to look for a re-entry. And I got in as soon as this daily candle made a new high, and my stop loss was immediately the 50 MA because the price is already above it. So that's pretty much where we are right now. And our position is still above our stop loss. You can see that right here on the SPY. And let's take you to the SPXL chart so you can see that more clearly. So you can see my position at 119.74, which is the break of this candle. The high of this candle, if you look over here while I hover over it, is 119.71. So I believe I had an order for 119.72. I got filled at 119.74. Position size is based on the risk. So my initial risk was the 50 MA line, and this was where my initial stop loss was at 117.15. So I calculated how much I would lose if I got stopped out on the same day that I entered. That's the max loss day for me. And was I willing to accept that loss? And yes, I was, and that's why I took that position size. So now let's take a look at the spreadsheet, and I'll show you all of the statistics so far. So again, here's my first trade with SPXL back on May 20th. And you could see the P&L over here. Yeah, these are small numbers, small risk, all of that stuff. But that's because this is kind of my first time trading these ETFs and swing trading these ETFs. So this is all about building a strategy, and hopefully we can make some money in the meantime, a little bit of money here and there, just to keep ourselves encouraged. But I want to see at least 10 trades that I'm profitable afterwards, and then I can consider increasing my position size. But I will always do that slowly and incrementally. That way things stay as positive for as long as possible. So anyway, we're at trade number 5 right now. This is the trade that I'm in right now, and I got in at 119.74, the initial stop at 117.15. So my max stop loss on the first day was $12.95. Right now, my stop loss is at $117.60, so the max I could lose is $10.70, and you could see how that compares to my previous winners. This one might be a little bit confusing to you here, where it says that I made $35 and then I made $1.25. That's actually an add-on trade, so I just kind of split those up. They look like 3 different trades, but this is all one single trade, these 3 right here. So there's 2 green and 1 red. That's all part of one single trade. So if you add these 3 up, that's what the total P&L from that trade was. So somewhere around 30 bucks. And then the trade that I got in below the 50 MA was right here, and that one I took my max loss on, which was 12.18. So you can see we're already well above that. So that's a good thing, and hopefully this trade ends up being green. Either way, it doesn't matter. I'm sticking to the plan. We're collecting data. We're not putting a lot of money at risk, and we're going to see if at least after 10 trades that we can continue to be profitable with this system, and then we'll consider increasing our position size a little bit. So hopefully this video was helpful to you. The main message here is to have a trade going into every single plan. I have a written plan for these trades that I follow. It is available on patreon.com/tradingarmor if you're interested in that plan, and the spreadsheet is there as well. So that's up to you if you decide to look at that plan or trade that plan. It's profitable for me so far, but no one can guarantee that just because a plan is profitable for them that it will be for any other trader. There is so many variables worked into that, although I try to account for every possible thing that can happen in the market in my plans, but nothing is guaranteed. So anyway, the main message is whether you use one of my plans or you come up with your own plan, you need to have a trading plan going into every single trade, and you got to stick to it no matter what. Then once you're in that trade, always take your stop losses, honor your profit target, and then in the long run, you should be green. Take care.